Okay, so I'm going to be talking to you about financial consumer protection in the face of generative AI. So in this talk, we'll cover a little bit about what is generative AI, some of the use cases that we see in financial services, how generative AI can harm consumers, and perhaps many of you have experienced or have dealt with some sort of Gen AI coming your way in perhaps a not so helpful capacity. Consumers' expectations of harm as well. Actually, what do consumers think about generative AI itself? And then we'll be talking in the second half about regulatory challenges for generative AI, new legislation, regulators and industry, what perhaps they can do to protect consumers further, and finishing up with some suggestions for safe innovation for generative AI itself. I'm trying to keep the talk quite light. I will also show you some examples of generative AI at play and talk you through some of the perhaps these mini case studies on what has occurred and why this is quite harmful behavior itself for consumers and why it's quite dangerous. So starting off with generative AI itself, what is it? Well, generative AI is something where we're talking about artificial intelligence that is producing new data itself, right? It's taking original outputs and producing new or creating original outputs of text, images, and sounds. Of course, like all AI models, it does learn patterns from data. They are powered by artificial neural networks, deep learning models, of course. And they work through training, right? So the way a machine learning model works is you have input data that has some sort of output. You learn some sort of mapping between the input and the output. But with generative AI, you're creating completely new outputs from having this learned input that goes in. The thing that's been really different that we've seen about the latest class of generative AI models that have come out is that they really start to have human-like responses when we talk about the class of models referred to as large language models. They can, in a very human-like sense, respond in the way that we do, right? And this is the thing that is absolutely changing artificial intelligence usage, and for consumers has led to a rapid adoption of this particular technology. Here we see kind of the time to reach 100 million users, and this is in the retail space, from these various different technologies, platforms, softwares, and so forth, right? We see all the way from Twitter here taking nearly 60 months to reach 100 million users, all the way to ChatGPT, the first kind of large language model deployed to the public. It wasn't the first large language model, there have been many before, but it really was the first that was able to scintillize the consumer market and simply taking, a couple of months to get to that figure. And this is important because this shows just how rapidly these particular technologies, or this particular technology itself, is being adopted within the market, and therefore how quickly regulators, businesses, industry, and so forth will need to respond in order to actually protect consumers from the harms that could develop from this particular form of artificial intelligence itself. There are, of course, many use cases of Gen AI in finance, and we should be clear that there are two parts to this, right? There's how generative AI is used in industry itself and how that could be harmful to consumers. And then there is the other half, of course, about how people who want to be malicious can use generative AI, in fact, to target consumers themselves and engage in criminal activity. But generally, if we think about it from just the financial services industry itself, generative AI promises to, or is being utilized for customer engagement, content synthesis, content generation, and being utilized quite a lot for coding and software purposes, right? We see lots and lots of developers utilizing Gen AI now to improve and write their code. And why is this beneficial? Well, simply because it's leading to increased efficiency and cost savings, improved risk management, and enhanced revenue generation. And unlike other technologies, perhaps, that have been implemented into the financial services space, you are actually rapidly seeing these benefits coming in a very short period of time, right? One may state that, okay, if we're implementing blockchain technology, these projects perhaps are slow burn. It takes time for these projects to come into place. There's an issue with stakeholder coordination and so forth. It has a longer return on investment perhaps, but with generative AI, you're seeing at least the effects of that come much, much faster. And a recent asset management event that I was at a round table, we had asset managers around the room stating that, you know, they had deployed 5 to 10 blockchain projects over a period of 5 years. They had simply spun up 60 Gen AI projects in 6 months. Right? That's the difference in terms of the adoption that we're seeing with this particular technology compared to others. This kind of slide is showing you again slightly more structured use case scenario and exactly in which parts of the financial services value chain Gen AI can be applied to, and some of the kind of use cases that are already in place within the industry itself. And talking about these actual real use cases, here we do see organizations and how they are, in fact, using generative AI. Commerce Bank, for example, improving customer experience. Morgan Stanley creating digital avatars internally for their staff to utilize. Goldman Sachs using it to deliver software projects in a much faster way. The Bank of International Settlements even utilizing LLMs to create central bank terminology models that can perhaps help them with prediction for inflation expectations. MasterCard using it to enhance real-time monitoring for fraudulent transactions. And even regulators like the European Central Bank utilizing it internally to help their own staff assess and create information much faster. And finally, again, JP Morgan there, again, a fraud use case, much like MasterCard itself. When we talk about the harm that could come from generative AI itself, these are some of the kind of aspects of where consumers can be affected. And of course, firstly, we have misinformation and erroneous advice. I'm sure many of you have utilized large language models and have seen this concept of a hallucination, right? Where the model doesn't have enough information really, or is not understanding how to, or doesn't have the answer to what you need, it can kind of make it up, right? And when it makes it up, it really sounds like it's very, very convincing. So you do need to be quite careful about this. And in fact, the newer models themselves explicitly try and incorporate referencing and cite where they have actually found this particular information, but still, sometimes it could even invent the citations itself, right? So you have to be careful about this as well. We have also privacy and data security concerns, and that's because these particular class of models require a huge amount of data to be trained. This is unlike other machine learning models that have come in the past that could be perhaps trained with less data. For an LLM model, a generative AI model, to really perform well, it requires an enormity of data to be present. And that can, of course, lead to privacy and data security concerns and potential, once you have all this data in place, for data breaches or indeed misuse of this data. There can also be issues with algorithmic bias and discrimination. And again, algorithmic bias is something that can exist for many machine learning algorithms, but again, can be much more severe when it is in the form of a large language model, because it is directly perpetuating this bias to whoever is utilizing it themselves, right? And for example, if you have a model that has been trained where it's only come across the fact that software engineers are men, then it will always assume when it is outputting that the software engineering field is a male-only field, right? So again, these kind of discriminative or biased understandings can come to manifest themselves based on the data that does go in. And finally, so these are kind of issues that you can have for the firm itself in the financial services world, but then this last one, fraud and manipulation, is what, in fact, criminals can use in order to become better at targeting consumers and causing harm to them. And in fact, you know, it's not completely new things that they're coming up with when we talk about criminal activity targeting financial consumers with financial services. Here we just simply have kind of the old school techniques that are utilized for fraud just manifesting themselves in absolutely new and sophisticated ways. So here are a list of kind of old scams that have existed already for some time and how generative AI is perhaps affecting these. So firstly, we have kind of this class of scams referred to as pig butchering scams, whereby this is a type of scam where you form a relationship with somebody, and through the forming of this relationship, through social engineering, for example, you try and persuade them to send you money, for instance, right? And the key point here really is this aspect of social engineering, because if the person that you're targeting has a presence on social media, it becomes very, very easy perhaps for a fraudster to feed in this data into whatever model that it has in order to target the person and make it extremely personalized to the type of fraud that you want to engage in, right? Suppose somebody has certain interests that you find from social media or certain nuances in their personality or how they speak, you can simply make the large language model also copy these and perhaps be influential to the person that they're talking to. Inheritance scams, you know, talking about long lost relatives, again, utilizing social engineering here. Humanitarian relief scams. You've also got something called triangulation fraud as well. And this is where now it's actually very, very easy to spin up a website, to actually create product images, product content, product reviews, simply because the large language model can do this extremely quickly for you and create a fraudulent shopping experience for someone. We also have telephone scams here, and this is actually using voice cloning techniques. So again, from having just a few words uttered to an algorithm itself, the algorithm can then mimic the voice of a relative, right? Your son or your daughter, all right? And you can phone, and then the fraudsters can make contact with their families and actually pretend to be the relative who is in distress and ask for them to have money sent. And this is an example that has, of course, occurred in several countries. And then finally, you know, you have kind of this email phishing that occurs, right? And also on telephone scams, this can also be video scams, right? And this can be the class of deep fakes that are occurring where people pretend to be somebody else on video, right? You copy somebody's video likeness and you get them to imitate whichever behavior that you want them to do. And indeed, email phishing has become more sophisticated as well. Long gone is the idea of you receiving an email from a Nigerian prince who has a $10 million deal ready for you if you would just simply make contact and engage in conversation. Now this is going to be some sort of sophisticated, elaborate kind of scheme that is coming across to you in perfect English and available to be translated in all the languages in the world that the LLM has some knowledge over. So the ability to scale with this kind of use of AI is unprecedented. Consumers themselves do indeed not have a full understanding of the harm that they could actually face from the use of generative AI that is coming across. So this is a survey from Santander in the United Kingdom, Santander being a large retail and commercial bank there, where they surveyed the British population and asked them questions related to generative AI and deepfakes. And here are some of the highlights of these bullet points. Over half of Brits, more than 53%, have either not heard of the term deepfake or misunderstood what it meant, right? So the consumer population is not even fully understanding what could actually be occurring to them. Over half of Brits worry about deepfakes being used for fraud. Of course, they should be. Brits' top concern when it came to deepfake technology is that it will be used to steal people's money. Indeed. And 4 in 5 people expect fraudsters to use the technology, and indeed, they are using the technology themselves. So let's have a look at some examples of generative AI at play. So this is an email that you may receive from Netflix, which is telling you that you know, there's something wrong with your account. Please, can you log in using the link? It's a special link that they've provided to you if you want to continue using the account and entering your email entering your credit card information into the payment screen itself. Much more sophisticated than the spam that you were perhaps receiving in previous years, and something that it takes, a keen eye to spot that actually this is not from Netflix itself. It has come from a fraudulent address. The keen-minded may say, okay, well, the email is not from Netflix, and therefore this is a fraudulent email. But if you're tired, if you're in a rush, if you're half asleep, etc., and you just see this coming to your inbox, you don't even half the time monitor who is sending you it. You just respond to what is there, right? Here's something else that is out as well, something a bit more sophisticated, perhaps coming from your auditor, right, asking you some questions about some invoices, perhaps, and even maybe some of you have experienced this yourself within your own organizations, receiving emails purporting to be from colleagues, right, where they come to you and it says, this is from, Nikhil Vadgama, director of the DLT Science Foundation, please can you urgently pay this invoice, right? And again, this kind of thing is something that even we have experienced, and it requires to have the proper controls in place such that you are not victim to this. The next thing I'm going to show you is the first of two videos. This video is something that actually occurred live stream on YouTube.
Good evening, friends. I am delighted to welcome you to this amazing event. Today is truly a special day, and I am immensely happy that you are all here to share it with us. We are presenting to the world the new product, Tesla Cybertruck 2.0. This is a revolution in the automotive world, and I'm sure that each of you will be thrilled by the possibilities we are offering. But that's not all. In honor of this momentous occasion, we have decided to hold an incredible crypto giveaway right here on stage. Yes, you heard right. Today you can double your crypto assets very easily.
So this video was put up on YouTube on a page that was mimicked to look like it was from Tesla. This went out as a live stream. This kind of thing that's covered at the bottom of the screen was the QR code, the wallet address where you could send your money. And of course, it really does look like Elon Musk is there. And does it seem like something that Elon Musk would do? Maybe, right? So of course, it's really tricking consumers that they could get double their money back if they chose to send a Dogecoin, of course, to him. Let's look at another example, and this example actually comes from a bank. So this is an example from Santander, what that they're trying to use to help educate customers about deepfakes.
Deepfakes are videos where AI technology has been used to create realistic but fake images and sounds, making it seem like someone is saying or doing something they never actually did. Its use is relatively new, but it will become more mainstream going forward. For scammers, it is a powerful tool they can use to steal your money. So, how can we detect a deepfake? Look for blurring around the mouth. The person might blink less frequently than usual. If they are wearing glasses, the light reflections might not look right. The background may not feel natural. If something looks strange, trust your instincts. In the same way you already look out for scams, being cautious is always the right approach. HMRC and banks are continuously impersonated. I've even been impersonated myself. This video is just the latest example. As you might have guessed, this isn't me, this is a deepfake created to warn you about deepfakes. But this technology will continue to evolve. So in addition to what you can see, context is very important. Think, how did the video reach you? Is the source reliable? Are they asking for money? If they are asking for money, that's a big red flag. Deepfakes of famous people are constantly on the news. But you should also think twice if an influencer you follow offers something too good to be true, or if your boss or children send an urgent request for money. Even with deepfakes, basic tips for avoiding scams still apply. Does it sound too good to be true? Is the firm claiming they can double your money actually registered with the FCA? Avoid investment opportunities that pop up on social media. Deepfakes aren't perfect just yet, but was this good enough to catch you out?
And probably it was, right? How many of you could really tell that that was a deep fake that was produced?
Deepfake.
Nope, we don't want it again. So, we've got a bit of an understanding about generative AI. We've seen where generative AI is used in financial services, how it can be used for harm perhaps by financial services firms inadvertently, and indeed by criminals themselves. Let's focus the last or the second half of this presentation talking a little bit about what can be done, right? Let's talk about it from a regulator's perspective. Let's think about it from what industry can do more of. There are certain regulatory challenges that do exist with generative AI when it comes to actually ensuring consumers are protected from financial fraud or from the effects of Gen AI models that financial services firms are utilizing themselves. And one of the first challenges that exists is indeed that these are black box models. We don't really understand why they do the things that they do, which then makes it difficult for us to actually fix the problems that may be there. There are also issues around accountability and liability issues, in particular determining responsibility when harm does occur to consumers. Whose fault is it? Of course, it's probably the content creator's fault, but you need to find who the content creator is. Is it the platform that has allowed this particular video or system or email or a phone call to go through? Is it their problem? Is it who should be accountable and liable? Or is it the payment provider themselves who has allowed this payment to go through from a consumer's account to the fraudster's account themselves? There's also issues with cross-border jurisdiction, right? If you're talking about AI services that operate internationally, this makes regulatory enforcement difficult. And indeed, differences in regional regulations compound this. And then perhaps one of the biggest issues is the rapid technological advancement. These technologies are evolving so fast and so quickly, it's difficult for the regulator to keep up. Well, what can be done by regulators to help protect consumers? Well, actually, there are so many existing financial consumer protection legislations or laws that are in place. These can be adapted or simply utilized, in a sense, to apply to Gen AI cases where consumers are indeed harmed. And for example, the GDPR, the Dodd-Frank Act, and for example, the Consumer Financial Protection Bureau, created out of Dodd-Frank, I believe, in the United States, have already come out and stated they don't need to create a brand new law, that their law as it exists today already does apply to Gen AI use cases, and indeed financial services providers do need to understand this and take that into account. In the UK, just a few weeks ago, we had the unprecedented move of the payment service regulator coming out and stating that if a consumer suffers financial harm by engaging in a payment to a fraudster, that actually the bank itself must reimburse the consumer themselves, right? And this limit, I believe, is I think up to £100,000 or £85,000, something like this. But in fact, the limit was being considered as £400,000. So it's quite a considerable sum. And therefore, this is the regulator putting pressure perhaps on the financial services industry to take more responsibility for the victims of fraud themselves. And indeed, is it right that all of the blame and responsibility is put at the financial services provider? Shouldn't more be done for the origination platform themselves? Shouldn't they be the ones that actually are displaying this kind of fraudulent information to consumers, and therefore they should be more responsible for this themselves? And here are some different regulatory approaches being considered or in fact in force in different countries around the world. So we see here from Australia, Singapore, United States, Canada, the UK. In the European Union, we've just had the EU AI Act come into force, right? And then in China, we also have some AI legislation that has come through as well. And you can see that they all kind of follow the OECD principles on trustworthy AI when they're mandating how Gen AI can be utilized, or how AI indeed can be utilized and broken down into different kind of principles and aspects of compliance for whatever firm chooses to utilize these particular technologies. The kind of differences are all kind of self-evident here, but for example, certain countries have gone to the point of adding in morality rules around AI, that in fact the behavior of the AI should be moral as well. When it comes to industry itself, what can they do to protect consumers? Well, certainly there are ethical AI implementations that they can practice, right, that they should consider is what they're doing ethical. They can improve transparency measures themselves by disclosure of AI, by in fact documenting how the AI is utilized, involving humans in the loop, making sure that there is human oversight to what a model is doing, having regular audits and assessment, and indeed monitoring. Other things that the industry could come about itself is thinking about insurance schemes, right? This is something that even could be levied on origination platforms, getting them to provide the insurance to be able to pay for fraudulent, for fraud occurring as a result of Gen AI. And then we have kind of use of emerging technologies, combining, for example, Gen AI and blockchain in order to enable better provenance and understanding of whether actually something is fake or it's real or not. And consumers require education. As we saw in the earlier survey, only 50% of Brits had even heard of the term. So this is something where there is a lot of work to be done. If we want to safely innovate with generative AI, what can we do? Well, recommendations are develop some specific consumer protection laws, do indeed mandate transparency and explainability, establish fairness and bias standards, and actually much of this has come through, for example, with the EU AI Act, right? This kind of stuff is all in there. I think one of the most important things that will be required is really multi-stakeholder collaboration. This is not just, an issue that financial services firms need to deal with. It is strongly the origination platforms that must take some sort of responsibility for the Gen AI fraud that is coming across. And again, even in the United Kingdom, there is a strong kind of feeling that it should be origination platforms that are contributing towards the banks, if the banks are the ones that are having to pay the fraudulent, the money back to a consumer in the case that fraud has occurred. And indeed, we should be supporting innovation responsibly, right? Firms should understand that it's not just about making the latest innovation that's going to improve their bottom line, but it is also about understanding that there is a balance to protecting consumers as well as giving them technological advancement. So, in summary, Gen AI models are kind of new models that use extensive amounts of data in order to produce new content. In financial services, Gen AI poses risks because of bias in decision-making, hallucinations, and indeed enhanced phishing, fraud, and manipulation techniques. Gen AI has enabled more sophisticated phishing attacks. And additionally, for financial services, the models can prove to be harmful to consumers through biased decision-making or unintended consequences. We are seeing current laws being adapted as a result of Gen AI becoming something that is being adopted and being utilized. Many countries are also going further with enacting specific regulations. And indeed, for the best outcome for consumer protection, we really do need collaboration between regulators and industry, and not only financial services firms, but indeed origination platforms as well. So I leave it there, and I thank you very much for listening to this talk. Thank you.